Hello, welcome to the next edition of Victory Finance Group's video program. Well, we all would have heard the news in the last couple of weeks. In fact, on the 2nd of October, the Reserve Bank have dropped the cash rate or reduced the cash rate down to 0.75%, taking it down by another 0.25%, a quarter of a percent interest rate. And I can hear the discussion out there in the marketplace. The consumers are quite frustrated that the banks, in particular the major banks, have not passed on that full 0.25 quarter percent. So let's just talk about that a little bit today, so we've got our head around why they're doing that and perhaps what's happening with the government. So the ACCC have been asked by the government to step in to do a review on the banks and work out why and understand better why the banks are only passing on those interest rates in basically 0.12, 0.13 in most cases. So roughly about half of what the cash rate of what the Reserve Bank has passed on. So we don't know what will come out of that review. It could take 12 months. Hopefully we'll get some understanding of what the banks and how they apply that interest rate reduction. So as consumers, that's frustrating for you, and I agree. I'm a consumer, I have home loans, and yes, it is frustrating to hear that the cash rate, the Reserve Bank of Australia wants to drop cash rates by a quarter of a percent, 0.25, yet only half it's being passed on. And it's not just the major banks, it's most banks. All the banks I'm dealing with are also only passing on 0.12, 0.13. So as a consumer, we're a bit frustrated, and hopefully the ACCC will address some of those concerns and we'll understand how the banks work. But from a lending point of view, we need to have a bit of a balanced approach and also say, look, the banks are the pillar of our economy. Having strong banks does strengthen the economy, and that was seen during the GFC years where the economy was under stress. And one of the many reasons why we got through, or why Australia got through the GFC in such a positive manner, was that we had a strong banking system. So it is important to understand that a strong banking system in the country does benefit all of us. The other area that it does benefit all of us is that we all have superannuation. And I can tell you that 99 out of 100 of you will have shares in the banks via your super funds. And so therefore, strong bank returns equals good returns on your shares. And frankly, the banks are paying a dividend at the moment of roughly about 7%. So getting a dividend return of 7% on your shares with the big four banks is far more than what you'll get on term deposit at the moment. So what I'd say to you though, as a consumer, really take control of your position. Don't worry about what you can't control. You can't control the cash rate in Australia. You can't control the interest rate that your lender is providing you. What you can control though is the ability to move lenders. So I do challenge you to have a look at your statement, understand the interest rate you're on. I read an industry article recently that 70% of Australian consumers do not know the interest rate of their home loans. That's a bit scary. A little bit like we don't know the balance of our superannuation funds. We should, because they're two of the largest assets. The home you have, or the investment properties you own, and your superannuation are two of your largest assets that you'll have. So please have a look at your interest rate on your statements. It's not just the interest rate, it's also the features. Now that's my role as your broker, to analyse the interest rate and the features and make sure the features are meeting up with your personal requirements, because everyone's different. We have houses that we live in, owner occupied, we have investment properties, so we all have different motivations for different properties and different loans. But we start with the interest rate. It's an incredibly competitive market. The four big banks are not the only banks in this country. I can tell you I'm now, 80% of my loans are being written outside the four big banks, simply because I'm getting much better and competitive interest rates against the big four. Product features are the same, but obviously I would have to analyse and review your personal objectives and situations before we made any recommendations. So please, I'd ask you to have a look at your loan statements, call me, email me, and happy to do a review for you, because as I said, take control of your own personal home loans and see if we can't get a better deal. There are some very strong rates out there. And as I say in all my closures of my videos, when you're looking at finance, always use a broker, and please pass that message on to your friends, because a broker is independent and we bring the whole market to the table, not just one or two banks. Thank you.